Over the past couple of years, cryptocurrency has emerged as a strong alternative asset class to diversify the money. The kind of return Bitcoin has generated for its investor is phenomenal. Hence, it has attracted a lot of new investors in the world of cryptocurrency. On top of that, the adoption of cryptocurrency from top institutions like Morgan Stanley and PayPal, which are one of the biggest financial institutions in the world, and endorsement from one of the world's most admired entrepreneur, Elon Musk, has resulted in quick adoption of cryptocurrency globally. As a result, there's a sudden rush to invest in cryptocurrency. But the majority of crypto investors are naive and end up making many financial mistakes while investing in cryptocurrency. For example, when they invest in cryptocurrency, they think that it will make them a millionaire overnight. Not only this, recently there are a lot of cryptocurrency scams that have resulted in people losing their hard-earned money. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, I have identified 8 financial mistakes that investors end up making while investing in cryptocurrency. These mistakes result in wealth destruction instead of wealth creation. What are those common mistakes? Let's have a look. Mistake number 8 is investment in random coins. Since the launch of Bitcoin in 2009, the cryptocurrency market has been flooded with new currencies. In the last 10-12 years, there have been more than 4,000 cryptocurrencies being mined all over the world. As an investor, people generally tend to get carried away due to greed. The first point comes to their mind is Bitcoin has already given huge return, so there won't be a multi-bagger returns from Bitcoin. Hence, they search for this next Bitcoin that can make them a millionaire, and majority of people end up investing in new cryptocurrency. While it makes sense to identify the next Bitcoin, the problem is that as a retail investor, the majority of people have little knowledge about cryptocurrency. They get lured by those 50 to 100x return in no time. Hence, they end up investing in unknown cryptocurrencies that eventually fail. In fact, in the last 10-12 years, more than 1,000 cryptocurrencies have already failed. Some investors even end up investing in ICO, that is initial coin offering. So ICO is like an IPO where the new coin is launched in the market. Due to the hype around cryptocurrency, there are many new ICOs in the market. Some of them are pure scams and many people end up losing money in ICOs. So if you don't have much knowledge about cryptocurrency, then try to stick with popular cryptocurrency. Mistake number 7 is no diversification. When it comes to investment, one of the most important rules is diversification. There's a famous saying that never keep all your eggs in a single basket. But the new folks that have recently started earning tend to get carried away with huge return from cryptocurrency in the past and eventually end up investing majority of their money in cryptocurrency. Some people even end up investing all their money in cryptocurrency. As an investor, it is very important to understand the risk versus return aspect of cryptocurrency, as it is a high risk, high reward game. While cryptocurrencies can give 5x to 10x return in a quick span, it can even fall 50% in no time. So please be very careful with your investment. Try to keep a limited amount of money in cryptocurrency, maybe in the range of 1 to 5%. And within cryptocurrency, you can even break your investment in 2-3 coins rather than keeping all the money in a single coin. Mistake number 6 is falling for phishing traps. Recently, there is a new wave of scam that is trying to fraud the investors by creating phishing traps. So phishing traps are basically the fraudulent message sent by duplicating the name of a popular company or even duplicating the name of YouTubers. For example, there are thousands of messages in my comment section where the fraudsters have created a duplicate of my name and profile photo and commented to invest in cryptocurrencies. They share their WhatsApp number in the comments. Unfortunately, some people even end up replying to them thinking that it's me. Not only this, scammers also send the text message or email with a link to open the app or website to trade in cryptocurrency, and many users end up clicking on the link and compromising their personal detail. Mistake number 5 is not securing the wallet detail. When you invest in cryptocurrency, you need to ensure that you secure your wallet details, because if you forget your password, you can lose all your money. For example, a German programmer named Stephen Thomas lost Bitcoin worth rupees 1800 crore as he forgot his password. He was the CTO of Ripple for 5 years and used to get paid in cryptocurrency. Once he got 7,002 Bitcoins for his work. At that time, the Bitcoin price was in few dollars. So he did not pay much attention and forgot his password. Today, that Bitcoin is worth rupees 1800 crore. And now, he's regretting not remembering the password. In fact, there are many such cases. As per report, around 20% Bitcoins have not moved in the last 5 years. Those Bitcoins are worth $148 billion. Generally, when you invest for long term, you do not access the account frequently. And eventually, if you don't have the password in a safe place, there are chances that you might forget the password. So ensure that you do not make this mistake. Mistake number 4 is timing the investment. This is again a classic mistake by many crypto investors. They try to time the investment where they wait for the cryptocurrency price to fall. But when the price rises further, they regret not buying. In fact, when the price falls, the same set of people do not invest, trying to buy at even lower levels. Ideally, everyone wants to invest when the cryptocurrency is at the lowest level and exit when it is at the peak. But when it comes to investment, remember that the best time to invest was yesterday. The next best time is today and the worst time is tomorrow. So make sure that rather than trying to time the market, you invest at different intervals in a systematic manner so that you average out the price by buying at various levels. Mistake number 3 is buying high and selling low. Another problem with cryptocurrency is that a lot of new investors try to enter the market when the cryptocurrency is rising. They get greedy and end up investing their money at peak. But when there is a correction and the price falls, they become fearful and end up selling their investment at loss. You need to understand that cryptocurrency is very volatile in nature. So when you invest your money, you should be able to take a hit of even 50 to 60% loss on your investment. And when there is a sharp correction, you should not panic. There have been a lot of cases recently where the cryptocurrency crashed almost 30-40%, including Bitcoin. And many investors ended up selling their investment and loss due to panic. Big mistake. Mistake number 2 is not paying taxes on profit. Even though cryptocurrencies are not mentioned in the Indian Income Tax Act and there is no rule defined yet, you must report them in your income tax return and pay tax on them. Taxation on cryptocurrency is similar to debt funds. So if you hold the cryptocurrency for less than 3 years, then you need to pay short-term capital gain as per your income tax slab. So if you fall under 30% tax bracket, then you need to pay 30% tax plus education cess. If you fall under 20% tax bracket, then you need to pay 20% tax plus education cess. If you sell your cryptocurrency after 3 years, then you need to pay 20% tax on profit with indexation benefit. So indexation benefits are calculated as per the inflation rate. So effective tax would be between 15 to 18%. So make sure that when you sell your cryptocurrency, you report the profit in your income tax return and pay taxes accordingly. Mistake number 1 is investing without knowledge. Majority of investors have no clue about cryptocurrency. What is the technology behind cryptocurrency? How does cryptocurrency really work? How is it different from other currencies? Although it is difficult for a normal retail investor to understand the in-depth technology for cryptocurrency, you should at least have the basic understanding. Like what is the blockchain technology behind cryptocurrency? What is the right strategy to invest in cryptocurrency? How cryptocurrencies are generated? How to secure your cryptocurrency, etc. The biggest advantage of learning is that you get a conviction to invest your money, and even if there is a fall, you do not do panic selling. In case you want to learn more about cryptocurrencies, you can explore the DCX Learn platform. In fact, this platform even has free courses and paid certifications. With free courses, you can learn the basics of cryptocurrency, and with paid certification, you can become a certified cryptocurrency expert. You can also use CoinDCX Go platform to invest in cryptocurrency. It was founded by Sumit Gupta and Neeraj Khandelwal, who are both IIT Bombay alumni. CoinDCX Go is one of the largest and most trusted platforms in India for cryptocurrency investment. It is backed by investment firms like your Coinbase Ventures, Bain Capital and Polychain Capital, etc. It has 1 million plus downloads on Google Play Store. The app is very easy to use and users' funds on CoinDCX Go are completely safe and insured by BitGo, which is a custodian of CoinDCX Go. BitGo is a very popular digital asset security company. CoinDCX Go has multiple security features like two-factor authentication and withdrawal password feature. CoinDCX Go is an ISO certified company and follows all necessary compliance rules and regulations. So in this video, we discussed the top mistakes that investors make while investing money in cryptocurrency. I hope you'll find this video useful. I will see you with another video. Till then, take care.